The Iran war is now officially causing the largest disruption of oil supplies in history. We are seeing the Gulf producers having cut oil production by at least 10 million barrels per day. We're seeing that Iran war has driven production to its lowest level in 4 years per the International Energy Agency. The IEA expects world output to fall by 8 million barrels per day in March, and we're also seeing this representing a decline of over 7% from 107 million barrels per day produced in February. And so that is what we're currently seeing happening in the Middle East. That is what we're currently seeing happening to oil prices. We've seen that being reflected with this recent price surge to $120 per barrel at the top here. And in today's video, we discussed whether this is about to continue, whether we're about to see this bullish surge to the upside continue, or whether we're about to see history repeat once again, because later in the video we're going to discuss the most important drivers, the most important cycles that show you that history is in fact always repeating. But let's first have a look at the technicals, and what you can beautifully see is obviously this massive breakout here through this downward trend that we've had been forming out since this high here in September 2023. We've seen that invalidation here back in the end of February 2026. We're now surging to those resistances here that we've beautifully marked with this top here in 2023. And in fact, if you have a look at the hourly chart, you can beautifully see that we're currently retesting this resistance as a support, as we've now recently actually broke from the downside to the upside. And so we are certainly having this acting as support now, which is certainly quite important, but you have to keep in mind that we're now moving into regions where the volume that has been traded is certainly lower. We are seeing those volume areas actually basically behave like a magnet, and so reversals to those areas are certainly always possible. But because of the fact that we are seeing those supply disruptions, we are certainly not neglecting that there's upside potential at this point. We do expect volatility, we do expect it going up and down all the time continuously, as we've seen it in the last few days. But to really understand what we are currently seeing here with this supply disruption, with this massive surge to the upside, we have to step a step back to understand the key drivers. And so let's have a look here on the weekly chart, and what you can beautifully see is a divergence. The divergence is unfolding before those crashes happen, before those recessions hit. For example, here with the dot-com crash, with the great financial crisis, and also the COVID crash. And what you tend to see is that oil prices are going up, and the copper to gold ratio is already moving downward. And so that is a divergence that tends to outform before we do see those crashes happen. We've seen that here previous to the dot-com crash. We've seen it also previous to the great financial crisis and all of those other instances. Now, why is this happening? Well, we tend to see that gold starts to outperform copper because gold is a safe haven asset, and copper primarily is a industrial metal. And so obviously when you have economic stress, you tend to flock into gold rather than copper, and this ratio moves downward. Now those divergences are also occurring right now, as we're seeing oil prices surge and the copper to gold ratio move down. That is historically always a crash signal, and that is our first crash signal for today's video, and exactly why we have to keep in mind there is a difference between short-term price action and long-term trends. Let's have a look at the gold to oil ratio, because it is also quite interesting, as we are seeing the oil prices obviously outperform everything besides the dollar in economic stress. And we tend to see that also beautifully being reflected by this ratio, as we're seeing that this ratio is obviously rising. Now, as we're currently seeing that the oil prices are obviously surging to the upside, we do see this ratio falling because oil is the denominator and this ratio is falling therefore. Now, we believe that this is about to be a quite similar scenario as we've seen it here with the great financial crisis, as we've seen oil prices surge and this ratio fall, as we're seeing it happening right now. But ultimately, we've seen a reversal happening, and that led to the ultimate downturn that we've seen happening here at the oil prices. Now, we've also seen that repeat over and over here at history, and you can beautifully illustrate that by the stochastic RSI, because this is beautifully showing you the cyclical structure of oil prices, and you can beautifully see that we've now had this surge to the upside here recently. Obviously, with this massive price disruption, the RSI is also surging, and that is quite similar also to what we've seen here previous to the great financial crisis, and also here before those other crashes hit. So we tend to see oil strengthening before we see it crash. Now, obviously, there are also always scenarios where this hasn't happened, but this is certainly a quite likely scenario that we believe is likely to happen here at Chronos. And we like to add on to that by having a look at the following chart. The following chart is the S&P 500 divided by the unemployment rate squared, multiplied by the US inflation rate year over year, multiplied by the US interest rates, divided by the M2 money supply. Now, you do not have to understand this fully, but this is just a ratio that really puts it all together. And obviously, as we're dividing the S&P by the unemployment rate, as the unemployment rate is rising, we do, for example, see this ratio falling. And that is exactly what we've seen previous to the last few crashes. And in fact, if you now have a look, we've seen that happen here with the dot-com bubble, we've seen that happening here with the great financial crisis, and also here with the COVID crash. And we've seen that ratio fall for quite some time now, and historically, those weakening trends always ultimately led to massive sell-offs and even recessions. And exactly that is what we try to warn you about in today's video. And so if you like this video, please make sure to subscribe to our channel and give us a thumbs up to not miss future videos and help us to rank better on YouTube with the algorithm. Also, don't hesitate to ask questions or give us your opinions down below in the comments. I hope you enjoyed the video. Thanks for your support in this community. See you the next time. Bye bye.